Hi, welcome to the video, and as of today, you can officially invest into Aptera motors again. In this video, I'm going to walk you through the basics of their filing and also show you how you can invest step by step. It's actually not that complicated. If you have no idea what I'm talking about, I will give you a quick overview. So Aptera motors is this bizarre or super cool looking car right here, depending on how you feel. But what makes this car very special is its solar panels covering the roof and the hood just all along the top of the car that is supposedly able to recharge more than 40 miles per day if it's in a sunny environment. And also they've built this car based on efficiency. Every single design choice was built to reduce drag in order to get that increased range. And on their higher end models, this car supposedly can go up to 1,000 miles per charge. Now, of course, these are optimal conditions. In reality, it's going to be a little less, but regardless, this car is doing something completely different, as you can tell by its design, and people are really excited about it and have always wanted to be able to invest. They had one round of funding where a little over 10 million or about $15 million was raised, and finally, after a couple of months, they've released more opportunities for us to invest. I've also made a couple of other videos introducing this car, and I'll link those videos in the description box below. In this video, I'm really just going to focus on investing. So let's actually look at where you can go to here. I would read this. This is their post that they posted 5 days ago, and we have a couple of links here, and we are going to take a look at their offering circular. An offering circular, that it's just what they filed with the SEC that gives basic information, and it is right here. I'm not going to go over this whole thing, but I do want to go over some important points. So here, the price per share, not much more to explain than that. It's $3.80 per share. And then the total maximum amount of dollars they are offering is $50 million. So there will be a maximum of 13,157,000 shares of Class B common stock at an offering price of $3.8 per share, which roughly comes out to be about $50 million. And the minimum investment amount is $1,000. So let's scroll down a little bit more. So this whole thing is 33 pages. I would highly recommend you read this through. It's actually really informative, not just for Aptera, but for these types of filings in general. There's a couple of things that are really important that I do want to reiterate. Feel free to skip ahead if you already know all this information and you just want to see the walkthrough. But for most of you, I would recommend you stick around and just hear out some basic thoughts before you go ahead and drop your life savings into this. Risks related to our business and industry. We have a limited operating history upon which you can evaluate our performance and have not yet generated revenues or profits. The auditor has issued a going concern opinion, and this could be serious, it could not be serious. Of course, there's just concerns of any young company such as this. The issue that shall not be named could materially impact their business. The company operates in a capital intensive industry. They face significant technical and legal barriers to entry. There are regulatory hurdles. Demand is also highly volatile, and they're also going to be affected by government purchase incentives. We know that Joe Biden is pushing for an EV tax credit. I also know Aptera is working behind the scenes to try to get some kind of credit for its customers, but all of this is very much up in the air. There's just a lot of factors outside of their control. I actually really love the Aptera management team. I also like Aptera fans. I'm part of it. The moment I saw this vehicle, I loved how they were doing something different, but you could have the best of intentions and things could just not go your way. So these are things you have to be careful of. Another thing I wanted to talk about is share dilution. If you are to invest now, just the structure of the shares, how much you own, that's very, very likely going to change. Like 99% chance it's going to change, because unless somehow somebody just handed them a couple $2 billion, they're going to need more money, and how many shares and the exact percentage and your returns are going to change. And here's a little example of what might change. So the type of dilution that hurts early stage investors most occurs when the company sells more shares in a down round, meaning at a lower valuation than earlier offerings. An example of how this might occur is as follows. These numbers are just an example. It's probably not going to happen exactly this way. So let's say in June 2020, or right now it's 2021, we invest $20,000 for shares that represent 2% of a company valued at $1 million. Aptera is valued more than that. This is just an example. So in December, this is a positive situation. It's doing very, very well, and it sells $5 million in shares to venture capitalists on this new valuation where it's worth 5 times more than before. Jane, on a valuation of $10 million, it's worth 10 times more than before. Jane now owns less percentage of the company, but her stake is now worth $200,000. So essentially, the pie itself has gotten much, much larger, but she owns a lesser portion of this now bigger pie. As an investor, though, this is bound to happen sometimes, and that's okay because you just want the most amount of pie in absolute terms. It doesn't matter that your pie percentage is smaller if your overall pie amount, your net cash or profit, is bigger. This is just a warning. If you're going into this dropping 100,000 or 500,000 and you think, oh, I'm going to own 1% or 2% of this company for all time, that's not necessarily going to hold true. That's very likely not going to hold true. That percentage ownership is going to change. So now for a counterexample, let's say in June 2021, the company has some issues, and in order to stay afloat, it raises $1 million at a valuation of only $2 million. So it was at 10 million and now it's at 2 million. It decreased by 5 times basically. Jane would own now less of the company, and her stake would also be worth way, way less, 26,000. Now, just a fraction of the 200,000. Now, these are all positive examples. They would want to give positive examples in this filing. I want to reiterate, you could also just lose all your money. This could completely go bankrupt. That is also another example. It doesn't matter if you own 50% of zero, that would still be zero. I'm simplifying things, but anytime I talk about any investment on this channel, I just want to make sure you know the risks. And as long as you understand the risks, I want you to invest as much or as little as you want. Okay, that's enough of that. Now let's actually walk you through how to invest. So if you go back to here, you can see that they actually have a dedicated investor portal. So now let's just walk through it. So let's do greenknighttrading@gmail.com. greenknighttrading@gmail.com. Next, you can create an account here. Type in a password. Full legal name. Okay. I'm gonna have to blur a lot of this information out, but just fill this out. Annual income and net worth. So how much did you make this year? Let's say 100,000. What's my net worth? -50. For these types of things, the more accurate you can be, the better. But at the same time, they're not going to check. And the most important point is whether you are accredited or not. So as long as your net worth is under $1 million, essentially you're all the same. We're not millionaires, so basically we're poor. So how many shares do you wish to invest? So here we just type in the number of shares we want, and then it'll autofill the amount of dollars. So if you want to invest, let's say $2,000 worth, you would just do 2,000 divided by 3.8. You would want 526 shares. So either way, you can think about a dollar amount you want to invest or a number of shares you want to invest. Real quick note, 264 is actually the minimum you can invest. Individual investor, a company, or IRA and others, most of us will be an individual investor. Here you select whether you're a US citizen. I am a US citizen. And are you exempt from backup withholding? Most of us will just choose this option. You only check this option if you've been notified by the IRS that you are subject to backup withholding. Next, so here, which is really cool, you can invest by credit card, by bank transfer, by wire transfer, or mail a check. I'm going to try credit card. Let's see if there's a big fee. And there actually is no fee. I will definitely be blurring this as well. Confirming my card. This is just all super blurred. And here we go. And click confirm investment, and that's basically it. So what happens to this money is it's essentially locked up for a while because this isn't public. Only when it becomes public can you actually buy more or actually sell your current investment. And it's hard to say when exactly that's going to happen. It could be a year from now, it could be 5 years from now. You're definitely taking a huge gamble because this is a pre-revenue company. But if they do well, it will pay off in spades. And on the flip side, it's a pre-revenue company. It's very, very risky. They could go under. So just be careful. Know that whatever you put in is going to be gone for a while. It's very, very illiquid. But yeah, that's basically it. Let me know if you are investing in Aptera Motors and why. If this was helpful, please consider subscribing. I try to find the best investing opportunities on this channel and share my honest thoughts and opinions about different financial and company news as they come out. So please follow me if any of that interests you. This is Green Knight Trading, where Squires become Knights. Thank you all so much for watching. I appreciate you, and I'll see you soon.